Welcome to TQ Talks, where taxes meet planning. Here's your host, Craig White.
Welcome back to another episode of TQ Talks. I'm your host, Craig White. If you're just joining us for this first time, welcome. So far this month or the last couple weeks or whatever it's been a while now, we've been running over just understanding basics of the One Big Beautiful Bill and how it affects business owners, because that's who our target is. Young entrepreneurs, or I should say new entrepreneurs who are trying to understand and navigate the path of business ownership and money and how taxes affect them. We've gone over estimated taxes and planning, and God only knows it continues to go. But this week, to tie it all in, we wanted to address cash flow planning, right? And that's something that people don't even understand. And Sebastian always talks about, one of our business partners, the first-gen business owner, which we are. And again, we can relate to it. We have no idea what that means or what we're supposed to be doing. So, let's just jump right into it. If taxes feel stressful to you every year, right? Even when you're making really good money, this is the episode for you. And the reason why you're feeling that way is because you're not planning based on the cash flow that you have. What you're doing is taking in money, assuming it's yours, and moving on. And then tax season comes in, you come talk to us, and the bill hits, and you panic. So it's just caused by poor cash flow planning around taxes. And today I'm going to explain what cash flow planning for tax efficiency actually means, and of course why it matters, because it definitely matters. Our goal is always to help our clients to pay little to no taxes. That is definitely the push. But the real goal and what our clients are seeing is just a giant reduction in taxes. But all of that comes through tax planning. And this portion, when we're talking about cash flow and cash flow efficiency, it's part of it, right? It's not just about the deductions and the credits that you get and all the little workarounds that we know. That's great and it's wonderful. But you also have to plan on giving Uncle Sam something. And the biggest hurdle business owners have is that they don't know how to do that. They just, again, like we said in the beginning, they make money and they say it's mine and they keep it moving. So it's about paying taxes intentionally, right, instead of retroactively. And I covered this before, proactive and retroactive. I'm talking about my son playing basketball and how some of the kids are reacting, right? Instead of saying, okay, I'm actually going to go after the ball. I'm going to, before it happens, right? The reactive ability of most people is a problem. You want to be proactive and not reactive. And right now as business owners, we react. We react to the bill that we get. We react to the money that we're receiving, and that's a problem. So when you're business owners, you guys know your income fluctuates. So it's difficult sometimes. And I know Patrick has a hard time dealing with estimated taxes, which that's my other business partner. He's not happy about those because he feels like you're preemptively paying into money that you don't know you have yet. But ultimately, as a business owner, it's your job to look through your books, look at your profit and loss, and figure out what your net income is. But we're digressing. So again, the struggle is because your money is changing, right? Month to month, week to week, day to day, and that can be a problem. You don't know payment deadlines. You don't know estimated tax deadlines. There's no taxes that's being withheld, like if you're a W-2 employee, right? So you're just going along, and then filing season becomes the first time taxes are really addressed, all right? So when tax planning only happens at filing time, then your cash flow is already behind. Right? You've already dug yourself into a hole because there's no preemptive planning for what's coming up. So you need to know when your income is coming in. And what I mean by that is you need to be looking at your books on a daily, weekly, monthly basis to understand what's there. You need to know when payments are due, and we're talking about quarterly estimated payments, or it might be state, local, depending on what your situation is. That's something as a business owner you need to be paying attention to. You need to set money aside, right? Tax money as income is earned. When the money comes in, you put it as part of the bills that you're already paying, right? That's what has to happen. You need to make your estimated payments, as we spoke about last time, on time and on purpose. Not just, hey, I'm going to toss $1 in, and not out of panic because you're freaking out because money's, oh my God, I made. And no, you're looking at it and understanding exactly what's going on so that the taxes feel expected, right? Not surprised. And you don't want to be surprised about a bill. You want to know it's coming. Hey, this bill for water is going to be $38 this month, and you already have the money set. It's not a big deal. The panic is not going to come in. So the first thing is separating tax money from spending money. That is probably the biggest hurdle for every young entrepreneur, because how do you do that? We talked about it in some previous episodes, the fact that usually when you're coming into a business and you're making money, the first thing you're doing with the money is not going crazy with it and buying cars and clothes and jewelry. You're paying bills because that's what's happening, right? And it's practical in theory. But what you also have to do is understand that tax money should never feel like available cash. You have to assume that it's not yours. And again, that money should not be sitting in your operating account, right? It shouldn't be sitting in that same bucket of money that all the rest of your cash is. It should be separated as soon as it comes in, because then you don't keep looking at it as if it's money for you to be able to use. Again, unfortunately, I got to say it again. You also have to look at your estimated payments and know that whatever it is, it's April and June and September or whatever it is in January, you need to have that on record and know, okay, as these times come up, I have my stabilized cash flow. I know exactly what I made. I'm going to set X aside in order to prevent a large balance due being my result come February, March, April, whatever you decide to file. That's something that has to happen as a business owner, right? A lot of time we treat gross income, that's all your income, as net income. We're not looking at all the expenses that are going on. We just see the big number and get excited, forgetting there's additional expenses that come along with it, one of them being taxes. We also wait until it's filing season to think about taxes. That is not the right approach. It has to be something that is on your mind and it's part of your normal business plan, your normal business model. It's okay, unfortunately, I got to talk about his raggedy taxes again, but I need to pay attention to it. You cannot figure it out later, right? That's something we've heard from business owners. I just thought I'd look at it. No, it has to be something that you're intentionally doing. And relying on extensions that we spoke about before instead of planning is not the right approach. You have to make this something that you are consciously paying attention to. So when the cash flow planning is done correctly, which you guys now know what to do, taxes stop being scary, which is a big deal, right? You don't hear a lot of people who are making a ton of money panicking over taxes. If you pay attention, especially on social media, the people who make a ton of money, and we're talking about CEOs and owners of large corporations, oh my God, no one gives a crap about the taxes at a time because they already know what's going on. Yeah, pay X to this and let's move on. Next, right? The payments feel manageable. It's not something overwhelming. And your decisions become clearer as a business owner. That's one of the key attributes, which I give Patrick all the credit because he does our books and he pays attention to all this stuff. And so I know what's going on. He'll let me know, hey, this is what's available. Here's your budget for marketing and operating expenses. Here we have this bill. I have this set aside for 12 months or 6 months or whatever the case is. I don't plan on those things. I'll be honest. That's not my side of the business. He pays attention to all those things, but it makes life easier. In other words, he's not going to give me money I can't spend, right? Once he ends up doing distributions besides our salaries, the money is ours. It's mine. It's mine to do what I have to do with because he's already budgeted for a million other things. And again, planning becomes proactive, not reactive. So good planning replaces stress with structure. That's a good sentence. Yeah, good planning replaces stress with structure. And that's what you need to have, right? So again, make sure that you understand your business. You're putting yourself on a reasonable compensation. You pay your estimated taxes. You're understanding how extensions work for you, right? Not against you in a good way, because all those things help with your cash flow. It's not budgeting. It's not accounting. It's not hoarding your cash and try to hold on to every penny. It's just being disciplined and understanding how timing affects you. That's it. So again, if you're a business owner and taxes still feel overwhelming, right? That doesn't mean that you're doing something wrong. That's I think one of the biggest misconceptions that we have as young entrepreneurs. It's nothing wrong with that. It just means you just haven't figured out your cash flow plan. And no one's helped you build a system. But that's what we're here for. So systems reduce stress. Guessing creates it. And we don't want to sit there and guess all the doggone time. I think I'm going to, no, we're going to plan it out. Listen, the takeaway here is always the simple one, right? Cash flow planning for tax efficiency isn't about paying less. I know that sucks to hear. It's about paying on purpose. There's a purpose to what you're doing, and there's a purpose to where the money's going. You understand why you're paying, how much you're paying, and when to pay it. In the next episode, we'll talk about how planning after tax season is probably often more important than planning during it, and while the real opportunity window opens up after you file. I'm going to try to see if Patrick can join me on that episode, so we look forward to seeing you. And any questions, you already know, let us know, 800-413-1456. If you're looking for a team to help you work with you for tax planning and tax prep for your small business, we're here for you. That's all we have for TQ Talks. Thanks for listening. Have a wonderful day. Later.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.